ONGC and Sun Pharma. Let's get in the action from the automotive space in terms of earnings. Bajaj Auto, mixed set of numbers. The stock is flat. Bharat Forge also on our radar. Sudarshan joins in with the fine print.
So in the two-wheeler space, there were muted expectations from two companies, and those companies are Bajaj Auto and Hero MotoCorp. Now, Bajaj Auto has come out with its numbers for Q1 FY26, and earnings have looked almost in line with expectations. So two major highlights were, first, realization has increased more than what we were expecting. It was up 4% year-on-year and 3% on a sequential basis versus expectation of 1% increase both YOY and QOQ. Margin has fallen below 20%. It has come at 19.7% in line with estimates, but after several quarters, company has reported margin below 20%. Talk about the headline numbers. Profit has increased by more than 5%. Revenue too has seen a jump of almost 6% versus expectation of 1% increase. The reason of minor increase in revenue was because of the volumes. Volumes on both sequential basis and year-on-year were up just 1%. That's the main reason there is a minor increase in revenue. EBITDA too has seen a jump of 3%, and margin, as I said, it has come at 19.7% versus 20.3%. But for both these companies, for the entire two-wheeler space, more than the earnings of Q1 FY26, what would be the important is what does company say about the outlook, especially as the festive season approaches. In one segment that company has been focusing is 125cc plus segment, and company is saying that it has gained market share. Now coming to Bharat Forge. So Bharat Forge reports both consolidated and standalone numbers. So on the standalone basis, numbers were slightly missed or almost in line with estimates, but consolidated numbers were better than estimates. Now, what is weighed on the stock? You would have seen that after the numbers, stock had moved to days high, but as the commentary came, stock has seen a sharp knock, and now it's trading with a cut of almost 2%. The reason company is saying that it's cautious on the outlook for remaining part of the fiscal, and it has given 2 or 3 main reasons. First, one is tariff uncertainty. Second, is on the back of rollback of emission norms related to heavy drugs. So if you take a look at the export and domestic segment, in export segment, YOY except passenger vehicle. So basically they have 3 segments: passenger vehicle, commercial vehicle and industrial. So YOY except PV or other 2 segments have seen a decline. On a sequential basis, all the 3 segments have seen a decline. Just now talking about the headline numbers, on the standalone basis, revenue was down 5%, EBITDA has seen a fall of 9%, and margin has come in at 17.2% versus 18.1%. So numbers were better, but because of the cautious outlook, you have seen a fall in the stock price.
Thank you very much for that. Let's talk